Do you agree with the estimate for PCE? And if it goes up just a tick higher month over month, as the forecast suggests, what does that tell you about the path of inflation?
It says that inflation really is on a downward trajectory, but the trend itself is pretty bumpy. And I think the Fed is expecting that. And as much as President Bostic has said that he thinks things are tight enough, I think the consensus on the committee is one where they still are yet less certain about that. And I think Chair Powell is saying that, we may need to tighten more if inflation doesn't show a clear downward trend, especially at core inflation.
Yeah, I think Chair Powell is definitely saying that, at least, based on his comments following Jackson Hole. So I was looking at the CME Fed Watch earlier. It shows more than an 85% chance of a pause. We're about 20 days away from that September meeting. Is this PCE report, is this the big inflection point that you think the Fed's going to make its final decision on, or are there other data points coming up that we should pay more attention to?
It's certainly a very big piece of the puzzle, but we have another CPI reading coming up before the meeting, and that will tell us even more whether the trend is intact going down or whether that bumpy trend may have some upward bias to it later on in the year, which I think many of us expect. So I think one of the things that the Fed has got to be is very cautious. Also, as much as labor market is easing up, the revisions in GDP are still showing we've got a pretty strong economy out there.
We always say that PCE is the preferred gauge. So then how could CPI change their mind? CPI is mostly focused on urban areas. PCE is generally everybody. So if PCE is the preferred gauge, shouldn't this be the one that really makes them or helps them make the decision?
You would think that, but the Fed itself is just always saying we don't allow any one point to influence all of our decisions. Yes, this is a very big decision maker and it's a very important piece of the puzzle, but the CPI is a fixed weight basket. It gives you a sense of where it is that prices are actually going up. The PCE allows people to adjust their spending habits so that they react by spending less on the more expensive stuff and more on the less expensive stuff.
So yesterday we saw a downward revision of GDP. I want to bounce a note from Morgan Stanley off of you related to consumer spending, especially consumer discretionary spending. So this note from Morgan Stanley is really about student loans. So it says in part, about half of student loan borrowers are likely to resume payments in Q4, with 70% of the payments coming at the expense of spending elsewhere. The drag on discretionary spending will stretch into the first quarter of 2024. How do you see the resumption of student loans impacting the broader economy? Of course, we're right on the verge of back to school right now.
The student loan is always a story that people are telling as one of the drags on the economy. But and this is a very much of a spending portion of the population because it's the young people who are doing a lot of the spending. But I think the one thing that we have been surprised by over and over again is how strong overall inflation is, overall consumption is. And much of that spending is taking place by the higher income consumers. And so I think as much as student loans are a drag on a lot of people, the upper end still seems to have a lot of buying power. And those guys are the ones that the Fed is most concerned about.